Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today's video tutorial will be going over the smart money theory. Okay, if you've followed any of our nightly market analysis videos or any of our educational videos at our free website at PerfectStockAlert.com, you've probably heard me mention smart money, and you wonder what exactly does he refer or does he call smart money? What exactly is his formula for determining that? I'm going to show you what that is today and give you some insight here. Back when I first started trading, right after the Enron collapse, right after that had happened, every uh, energy provider was like on the question in everybody's mind was, are they all going to go bankrupt or get taken over by the government or whatnot? And that didn't make a lot of sense to me because you can't all go bankrupt if we're all going to want electricity. So somebody had to bounce back. All right. The question was which ones? Which ones would be uh, redeemed and which ones would actually fall off the cliff and into bankruptcy? You could have answered that question two different ways. Number one, you could have analyzed the fundamentals and you could have concluded the same thing everybody else did. The reason why you would have concluded the same thing everybody else did is because you're all using the same playbook. You're all going to be looking at the PE ratios. You're going to be looking at debt levels. You're going to be looking at all these fundamentals that everybody agrees on are dangerous or prosperous. Okay, so whenever these hedge fund companies go out there and they get their, some guy goes over to some Ivy League college and gets himself an MBA and gets hired by Goldman Sachs, he goes to work for them and he sits down with this bunch of money and they trust him with his money because they know he's not going to do anything stupid. He's going to, theoretically, he's going to actually make sound investments. Okay, he's either going to short stocks that are overextended or he's going to buy stocks that are oversold and have potential for the future. So you can either go to school like he did or you can watch him do it. And how do you watch him? It's pretty easy. Whenever he moves that large amount of money that he's been trusted with, you could see it on the volume level right there. Okay, this is the first important step. No stock will make any major, substantial, sustainable move higher or lower without volume confirming it. So if you have this particular stock is FHN and it's trading up here at about 1150, something like 1160 a share, and all of a sudden she breaks down. Why does she break down now substantially? Why not before here? Why not here? Why not here, 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 any of these other time periods? Because none of these had substantial volume behind any of them. They all had about average daily volume. This red line indicates average daily volume. On this day, you get a major sell-off because volume's huge. Okay, volume has just jumped up to 4 times average daily volume. Actually, in this particular case, it's 4.6 times ADV or average daily volume, a total of 13.8 million shares. That is a substantial chunk of change right there. This following day, you get more selling. You get 14.4 million or 4.8 times ADV or average daily volume. These two together total 28.3 million shares. Okay, that's a lot of shares traded. Not something that Joe, Carl, or Bob has in his 401k. All right, these are substantial chunks of change that total about $302 million in 2 days. Okay, that's a hedge fund. That's a mutual fund manager. That's those types of guys, insiders, that kind of stuff. Smart money, which we all have come to, know that these guys move markets, move stocks, all right? And sometimes they do it by manipulation, but regardless, no stock makes substantial, serious, sustainable move without the volume. So again, rather than going and spending the next 8 years getting your education to learn what they're going to know, and then concluding that even though you know what they know, and let's say, for example, this stock is here, and you say, you know what, my fundamentals say this stock is overextended and needs to be shorted, and you short here, she still won't fall. No matter how right you are on your fundamentals, she will not fall until volume comes into play, which means you need other people. In the stock market, you need other people, hedge funds, the masses, whatever. You need them to be on board with your trade before the trade will actually start to make you money. So rather than wasting your 8 years in studying some fundamentals and all kinds of stuff and then having to work for Goldman Sachs, how about you just sit back and run a scan every day looking for what they're doing? Okay? It's that simple. In this particular case, we're looking at a major short. And if you've watched our videos discussing how to play this guy from the short side, You could have shorted him on this day, made this money that same day. You could still be in the trade because you got a series of lower highs still in play. Okay, lots of stuff going on here. You can learn that in our other videos and our advanced lessons. But the main thing I want to point out is even if you have the fundamental education, it's still not going to get nothing until that volume increases substantially. All right, so you might as well just go hunt the smart money, and that's what smart money theory is all about. Basically, concluding what they conclude and then timing your entry point with them because they're going to promote that sell-off in this case or promote that advance in other cases. Okay, you just got to determine whether it's a bullish or a bearish situation, and then from that point on, you want to ride their coattails, so to speak. Okay, pretty cool, pretty simple, pretty easy. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Okay, a quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care, I will see you in the next video.